Well, here we are in week 17 of my series Bubble Watch. That's where I go into the back end of my MLS system, the multiple listing services. Go into my account. I share the screen with you to look at the real numbers, real time, what's going on, so we can see if we can catch when that North Florida's Jacksonville metro area's bubble is about to burst. Hey, we covered everything from the active listings, from the solds, from the pendings, look at new construction sales, started looking at foreclosures now to look at that. We put them all together in charts where we go all the way back to week 1 when I started this, okay? That's over 4 months ago, and we put it all together so you can see it and track it. And we're going to get to it in 3. Hi, I'm Tom Kerr, and I'm the host of this series Bubble Watch here. And in case you're new to the channel, then go ahead and subscribe or hit that bell to get notifications for these future videos, because I do this every week. Hey, you know what? I'm just a regular guy who happens to be a real estate agent here in North Florida, and that's where I take you into my MLS account to show you what's going on. I get calls all the time from people wanting to relocate to North Florida. Some of them even want to relocate out, and that's okay. If you need help with real estate, buying or selling a home, give me a call, send me a text, or shoot me an email. Hey, now let's get back into the MLS, and the first thing we're going to look at are those active listings. Okay, we're going to look at the actives here, what's going on right now, and we've got a total of 6,290. Next, we're going to take a look at the solds, what's been sold in 1 week back, and that's up here in Northeast Florida, and that's 352. Okay, let's look at the contingent taking back up. That number comes out to 810. Next, we want to look at the pendings. And these that went pending 1 week back, 540. How many people withdrew their listings? Okay, let's look at the withdrawals for 1 week back. That comes out to 96. How many listings went expired? That's 126. And now let's look at the new construction. Okay, new construction sold, 29. And how many active new constructions? 1,489. All right, now while we're in here, let's go look at those foreclosures. Now what I do with the foreclosures is there's 3 types that I'm looking at underneath the foreclosure umbrella here. I'm looking at actual foreclosures, pre-foreclosures, and then I'm looking at short sales. And we're going to separate them, we'll look at them individually, and then we'll look at a total. And these are out of the active listings that we have right now. Okay, first we're looking at short sale, and the short sale is 8. Okay, next we'll go to pre-foreclosures. That number is 9. And then we'll look at foreclosed. And that number is 11. Okay, now I take all those numbers and I put them in that chart that I create where we've tracked all the way from week 1 for most of this stuff. So let's put it into that chart and let's take a look at how it compares with last week and the previous weeks. Okay, active listings is 6,290. Sold is 352. Contingent taking backup was 810. Pending is 540. Withdrawn is 96. Expired 126. New home sold is 29. And new homes active is 1489. Wow, what a difference from last week. And remember, now we're going to go over interest rates too, what happens. That's one of the things we cover. But remember the interest rates last week, they started going over 6%. And I was saying, let's see how that's going to affect the numbers. And boy, it looks like it has made an impact. Okay, because when you look at the solds, man, it's like half. Okay, cut in half. And then look at the pendings are down. Okay, and then also look at the new construction. Holy cow, you know, 29, I mean, it dropped off the cliff. Okay, so it looks like this could be a problem with these rates going up. Now, why we keep track of this weekly is because you just can't go by 1 week after another. So I've been doing this for this is 17 weeks. So let's look there and see how these numbers compared to the weeks prior. Okay, first we're going to look at, we see up here the actives, okay? We're at 6290. It has been progressively going up ever since we started. And then let's go back here all the way to week 1. And back then that was in May, okay? And look at that. I mean, inventory was really down. So there you were at almost 3,000, and now we're over here over 6,000. So inventory has doubled. Now look at the solds. 352 got clobbered from last week's 710. Okay, and we had those dips here too that went into the 4s. Look at that from week 12. But let's go back all the way to week 1. There we started out in the 5s, 6s, 7s, 5s, all that. So it had, the 500s was the low there. Now, here we go, coming back up here, 352. It's the worst since we started keeping track of this. The contingent taking backups, okay? Now we see an increase in those contingent taking backups, went up to 810. Okay, now remember, these are homes that are under contract, all right, that are waiting for a contingency, and like I said, it's usually the home inspection. Can be appraisals, can be financing. And the things are, with these rates going up, it can throw people out if they don't got the rate lock, or it depends on the lender how they got it worked out. I've seen people like a week before closing, lose it because the lender changed something and they adjusted the rates. And that's horrible for those people that have been waiting all this time and all that. So we've seen this go up a little bit here. This number hasn't gone up enough to make up for that difference in solds being cut in half, but it has gone up. And then the pendings though went down, and those pendings have gone down. That goes along with the solds being down, because remember, if it's statused correctly, okay, the pending means they've passed the contingencies and they're on their way to close, although pending doesn't mean it's going to close. All right, check out, we've got the withdrawns, 96 people. Yeah, that's about right, where we've been. The expireds, 126. Okay, that's down. There's less people, that those homes that got expired. So, when we looked at it, it's been all over the place ever since, all the way to week 1 when you look. And you can see there, we were like in the low, below 100, then after it went up about 100, then back down again. So it's fluctuated somewhat. Then here we are, new homes sold, 29. Now last week it was, man, it shot up. More than double to 165, and then we went down to 29. And you also see the active new homes has increased somewhat too. Now, could this be those interest rates? Now, some of these new homes, yeah, there's some out there that are in the 3s and all, but a lot of them were like $500,000, $600,000, $700,000. So that, that interest rate going over to 6 may have pushed some people out, or some people holding off. It's going to be interesting when we look to see how many sold below lists and how many sold at list and above list. That's something else we're going to be charting here. Also, we're going to be going through those numbers. But I want to show you something. I don't know if you remember me talking about this, how I cannot stand the term, a house is your biggest investment you'll make. No, it's not. It's a place you're going to live. Okay, you've got people that are investors, and you're investing in it, and it is an investment, or it's a place to live, and it's a home you have to be in. You got to rent, you got to, or you buy something, or you live with relatives, one of those 3 things. So, we got to look at this and see. Let's look. I want to show you this article here, and this came from Forbes. Now, right here is from Forbes, and it says, should I buy a home now or wait? And in here, what they say right there, they say, because homes represent the largest single purchase most people will make in their lifetime, it's crucial to be in a solid financial position before you dive in. I like that. Largest single purchase of your lifetime. Yes, not your largest investment, okay? Because, unless you're, and there's people that do this, okay? So it's not everything. Most people aren't in it to flip their own houses and look in that way, okay? There's people that'll stay in a house for 2 or 3 years and then resell it, move on to something else just to make a profit and keep going on like that. They work that. There's people, of course, that flip houses, you know, and that's all they do. Now, the people that really, you know, that this really hurts when a market downturns like this, and we're going to look in here too to see about when this market's go up and down and what Forbes says about this, but is if you happen to buy on a high end and for some reason, some life event causes you to sell and you've got to move, okay? And it's in a short time when it's going down, and especially if you got into a VA mortgage or FHA 3.5% down, VAs being 0 down, even though you can put more if you want, but most don't. Now you're in a bind because you don't have that equity from the down payment or anything to offset. Plus you had those closing costs when you bought it, and you got closing costs when you sell it. So those people are in a bind when things go down. But that's not the majority of the homeowners. But you know, it does happen in a down market. Although on the reverse, when the market goes flying up, they take advantage of that, like what happened, you know, last year. And that does happen and we see how fast these markets turn. Now remember, when COVID first hit and everything was getting shut down, the government's shutting down all these businesses. Well, they pick and choose what businesses they wanted to shut down, but they shut down a lot of businesses, a lot of small businesses. A lot of people were hurt, and financially there were people, so-called experts, saying, don't buy a house now. You know, don't buy now, don't buy now. Well, look what happened. Yeah. All right, let's look back and see what else Forbes has to say. Right here, I love this. Trying to time the market or predict what might happen next year is not the best home buying strategy. Instead, it's better to buy based on your budget and your needs. If you find a home you love in an area that you love it, and it fits your budget, then chances are it'll be right for you. Man, I can't agree more, okay? And I was talking with somebody this past week about buying a house like this. It's what you can afford, right then. Okay, so if you can afford $1,500 a month, or $1,200 a month, or whatever it is, then that's what you can afford. You find a house, you buy it, you're happy with it. And if the market goes down, well, I mean, you're okay, unless you got to sell. But other than that, it doesn't matter. I mean, you got to have a place to live, and it's either that or rent. And some of the things that we have to look at, you know, everyone wants to compare what 2008 and now. Oh, this is going to be another 2008. Well, we don't know that. If you know that, if you're one of those people, one of my critics that are out there saying that everything's crashing, all that, put in the comments, I want to know the month and the year, if the day, if you can, or the week at least. Tell us when it's going to crash and when's the time, because that's the bottom. Tell us where the bottom is so we can start buying and then get on the train that goes up, okay? Put it in there, okay? I can't tell, okay? But apparently a lot of people can, you know, but so far they haven't given me a date, okay? Big thing to look at is rentals, okay? When rentals go down, start going down in price, and jobs, the unemployment starts going up, now we really got to watch things, okay? Because now that could be the edge of that bubble bursting, okay? Let's look at these rents, okay? This article on rentals. Okay, this here is from a company, the Mortgage Report, I believe it's called. And what they did was they had here, now they just got the numbers going to July of this year, but look at this, okay? They got the overall median rent was $1,879. The changeover last year, up 12%. The changeover in 2020 is 23%. And look at this, a one bedroom, okay? One bedroom, change 12% a year, 22. Folks, this is tough, and these prices, I mean, well, these rental leases, they're high, okay? And a lot of people force it where, you know, buying a house is about the same, even at the interest rates they are now for some people, depending on what you get. But if you're looking for a house that's like a 2-bedroom, 1-bath, believe me, it's going to be a better deal than renting. Again, at least you got a yard and something like that, and it's your own place. So, I mean, these rentals could be a problem. Another problem is the landlords that sell, especially if they're selling these homes. People are renting homes, and the landlord decides to sell the house, get out of it, doesn't want to, now there's even more shortage of rentals. And a lot of that happened last year. A lot of people, because I got the phone calls, okay, people that their leases weren't going to be renewed, okay, because the landlords were selling, and now you've got a shortage of rentals, okay, so this rental price is going up. Next thing I said, look out, look at the unemployment. Let's check out this unemployment numbers. Okay, here, let's look at Florida, okay. Florida, you can see here from January all the way February, March, April, June, July, and Florida's at 2.7, one of the lowest, in the country. 2.7, okay? Now, everyone wants to compare what's happening now with '08 because that '08's fresh in their minds. They lived through it, okay? They didn't live through the '80s, when things were even worse, or inflation in the '70s, a lot of people. '08 is the big one, okay? So let's look at how '08 compares to now. Okay, this was the unemployment. As you can see, now this isn't just Florida, this is nationwide. So we're there in August, 3.7, as you can see there. Here is when everything went to crap. Okay, as you can see, this whole time here. So employment hit the peak there at like in '08. Let's see, where were we? Right there in the middle of '08, like 7%. And it went up just before it went out there. It was like in the 4s, okay? Hitting the 7s. Then at the end, like there where it really went up was in November of 2009, 9.9, almost 10%. Now, this big spike here was because of COVID. So you can't even count that because that isn't normal, 14%. But that's what happened. But look how fast it dropped, when it came down to where we are now. So my point is that our unemployment rate is low right now. So we've still got a good jobs market. Spending is actually up too. People are spending. Now the gasoline prices, regular inflation, all that has really put a damper. People are charging a lot on their credit cards, which causes problem with debt to income ratios when they go to get finance. This is happening, or they're taking out equity out of their house to buy stuff. Then when they want to go sell, there's less there. Once they sell, especially if they're selling at a lower price. All right, let's now take a look at mortgage rates and see what the mortgage rates did over this last week, because we know they went into the 6s. Okay, here we look. We were there like on September 1st. At 6.23, and as you can see, there it was up, then it went down. Okay, then the crazy arrow went back up to 6.25. Holy cow, that was a jump. Then we got 2 green arrows going down to where we ended up today at 6.01, so basically 6%. Okay, so we're seeing we're at 6%, and like I said, we got to see how this plays out for this next week to see what happens, to chart things, to see if we're really on that down slope, that there's no recovery, or if things are, like most people are saying, that the market is getting more normalized now. Okay, and this is what happens to get to that, because we were so far out of whack last year that we need a big adjustment, just like the stock market does. Okay, so now let's take these, I'm going back in, I'm going to make that Excel spreadsheet where I take those numbers from all those solds, and we're going to look at what homes sold above 500,000, what homes sold below list, at list, above list, and then also compare the new construction. Okay, what I do is I take all that data on the Excel file and I export it over, and then I clean it all up to make it like this. Okay, the homes that sold 500,000 and above, they made up 27% of the market. Homes that sold under list made up 64% of the market. Homes that sold at list made up 16% of the market. And homes that sold above list made up 20% of the market. Well, we're seeing it now that was a pretty good jump there to below list, and then if you look here at the chart where we compare these other weeks back, as you can see, that the homes that sold at list, that number's been going down, and then the whole above list, that number's been going down too. Now look at the homes that sold 500,000 and up. Even though we got a smaller amount, it jumped a little bit, 27%, but when you look at it, man, it stayed about the same. And remember, the reason I started tracking these 500,000 above, because the price per square foot was so high that there were people saying, well, that's because more and more expensive homes are being sold. Well, that hasn't been the case. It's been pretty consistent, okay? And that's something I forgot to put in here. I usually put in before this, is the price per square foot here in the Jacksonville. Let's take a look at that right now. Okay, here we are at rate.com, and as we look at that price per square foot, well, it has the first time that it dropped. See, it plateaued there for a long time, and now it dropped, but not by much, but still a drop. Before it was 202 all the way across here for like a month, and then here last week it dropped 201, and it stayed at 201 this week. But that $201, that's still a pretty good price to pay per square foot, okay? That's still enough to keep a lot of people out of the market, you know, that just can't afford to buy a house, you know, at averages like this. All right, let's look at those charts for the new construction. Okay, for week 17 here, the ones that of new construction that sold under list came out to 18%. At list was 32%. And above list was 50%. Okay, man, it's pretty different than last week's. Now remember, last week, all right, the new construction, the sales went off the chart. But that goes with what we're looking at here, that last week it was 69% of the homes sold under list. So do you think maybe that has something to do with it? Remember, I was telling you, I was getting some notices of some homes that were being dropped in price, new homes, like a lot, some 50, 70,000, but there are homes that were 800,000, 700,000. So the percentage isn't as great as if it was a $300,000 house. But the fact is, did these home builders have like a little fire sale last week, okay, and brought all this down? I don't know. It's too soon to tell that, but it kind of goes with that, huh? When you look at that, the amount last week of homes that sold below list, and then the number shot up. Now this week, that numbers go down. Now they got 50% are selling above list, and then the new construction solds go way down, take a hit. So I don't know what's going on there yet. You know, we've got to see what's happening. And again, remember, new construction, you know, they work these deals. They'll do things with like, you know, like if you use their preferred lender, you know, you get closing cost credits, and then also they can do upgrades and stuff. Some do, some don't. So we can't see that. We don't know what concessions they're actually giving them. All right, let's look at those foreclosures, because remember, all these people were telling us that foreclosures are coming hard and strong, and that's what's going to be putting us into the ditch, okay? That bubble's going to pop, and we've got to keep an eye on those foreclosures. So let's see what they've been doing. Okay, the foreclosures. We had 11. Pre-foreclosures had 9. Short sales, 8. That gives us a total of 28, and still keeps us at about less than half of 1%. Well, I'm not seeing this flood of foreclosures. Based on these numbers, and based on Northeast Florida, I don't know, South Florida, California, Colorado, I don't know, New York, I don't know what they are, and I don't care. All I care about here is Northeast Florida and these numbers here, and I just don't see it. Hey, you know how every week now I got a house that I pick on what was sold and how much they made, and you know how that was included in the prices that dropped. I'm doing a house, but it's a different take on what's going on. And this, and you got to stay with me here, because I got a point to this that I'm going to show you, okay, on why I think it, for a lot of people, this could be a good time for buying a house. Okay, again, if you're not using it to invest and flip in a couple of years, you're looking for a place to live, I got some numbers that show you that it may be okay for some people, depending on your situation though. But check this out. Okay, here I was going into my MLS, and we have a house that originally sold back in 2015 for $325,000. And if you look here, it went on the market last summer. Now I specifically picked something that was a year old, okay? That happened, and stay with me, I got a reason for doing this. Okay, so you look at back there in July, okay, it was like it had expired. Okay, it was for 60 days on the market, so it was back there, it was back in May, okay, that it actually went, and it listed for $420,000. Okay, went for 60 days and didn't sell at 420. And that was okay in the middle of 2021, but then things got hot. Okay, it ended up selling for $495,000 in 12 days when it went on the market, and it was probably there, like, let's see, it sold, the actual sold date there was October 4th, so it was on the market 12 days before it went under contract. And if you look down here, okay, there's a couple of things. You know, I split this up. Check this out. It started, original list was $465, sold for $495, $30,000 above list for cash. Okay, this was the crazy time. Okay, and to show you how crazy it is, here, check out this set of notes that was in the MLS for anyone thinking about wanting to put an offer on this house. Look right here under the remarks. Multiple offers, highest and best by 9 p.m. Sunday. Okay? Now, why am I showing you this? This is why. When that house was bought, now that was a cash deal, but had it been a finance deal, it would have been around 3% interest at the time. Okay? Half of what interest rates are right now. Okay? So everyone's saying, like, okay, yeah, you can't buy a house at 6%. You don't want to do it, you know. Well, all right, well, follow me here. So that house there was $495,000. Now, if it went VA, they could have got zero down. FHA was too high for FHA because of the limits. Conventional, most people 20% down, although you don't have to put 20% down for a conventional. But to split in between the 0% and the 20, I came up with 10% down. So figure this, okay? $495,000 for the house minus 10% down. That means you're financing $445,000, $500. Now these, what I'm giving you is just P&I, which is principal and interest, okay? I'm not doing the taxes and insurance and getting all that because I don't know for this specific house, okay? But financing $445,500 at 3% interest on a 30-year loan would put you at $1,878 a month. Okay? Now, take that house. Why I'm saying that this is actually a better time for buyers than last year for a lot of reasons. Take that house that was listed at $465 last year. You got it now. If it's at $465 now, I know no one's paying $465 for that house, okay? And in fact, they're probably, with the way that we see these numbers of the houses going below list, right now no one would probably want to pay maybe more than $400 for it. And right now you're thinking, ah, man, the people that bought it last year got screwed. No, they didn't. They bought, just like Forbes said, you go with what you can afford, the house you want. Maybe it was the perfect house just in the neighborhood that they wanted and everything. It was close to where they wanted to be, or work, or this, or it had everything they wanted. And it was perfect. It was within their budget, so they're fine. They're happy as long as they're not looking to sell it right away. Okay, so let's just say, for argument's sake, we'll take that $465,000 list right now. I'll even give you $420,000. Okay, so you buy it for $420,000. Okay. 10%, okay, down means you're financing $378,000 at 6%, which equals $2,266 a month. Okay, so what's the difference? Well, let's see. Let's roll this up here. Okay, that difference right there is $388 a month. Okay, that you got. Now, look at this, all right? It's $388 more a month you're paying in a monthly payment for that same house. So see, people are arguing, saying, see, I told you, buyers don't have it better now. You know, they're still paying more. All right, but look at it like this. It was $495,000 minus $420,000, a difference of $75,000. That's if you paid $420,000. And I bet most of you out there ain't going to give an offer for $420,000. It's part of why, you know, sales are down, because there's this big disconnect between sellers and buyers right now. We're in that little lull where sellers are still trying to get, you know, 2021 prices, and buyers want to pay, you know, way below market. Okay, so you know we got that going on. But so let's say $420,000. That's a $75,000 difference. $75,000. All right, on paper. Now, maybe for the cash buyer, maybe. On paper, that's $75,000 in your pocket. Okay, $75,000. And what's it costing you here? $388 a month extra. Okay, but you save $75,000. I don't know. You know, now I understand. Oh, I can hear the people saying already, nah, somebody financing, they don't got $75,000. I'm saying it's on paper. The house cost $75,000 less, okay, if you did it, if we're going with this scenario. Even if it was $50,000, okay, it was $50,000 if you paid more than that. I mean, first of all, you wouldn't have paid, you know, $30,000 above asking price, okay, now, and you're not paying asking price less. So $75,000 that technically you've got to use, okay, for other things. We'll take out a loan for the $75,000 then. But $388 to get $75,000 off. When you look at it like that, it's not that bad, okay? Now again, you know, it's your personal situation of what you're going to do. I sit here, I just show you the numbers, okay? I throw my opinion in there, but you know, kind of Forbes is kind of going along with what I'm saying. And ultimately at the end, it's always your decision on whether to buy or whether to sell.